In this video, we are going to see very effective long combo option strategy by selling a put and buying a call. Watch this video fully to understand this strategy. Investor will invest in this strategy when they consider market is going to be bullish. Risk and reward under this strategy is unlimited. However, by calculating break even, we can track this performance to avoid more losses and we can book large profit on upper side. Let's take ABC company as an example, which is trading at the range of 450. Under this strategy, we need to sell put option at a strike of 400 with a premium of 1. Then buying a call option with a premium of 2. The net debit will be around 1. The break even will be 501. Calculate this option strategy example with your preferred stock. When the stock price moves above break even, we will be in a good profit. When it goes down, we will be under -1 loss until 400. Put sold will be in the profit side between 400 to 700. Call purchase will be in profit side above break even. In this strategy, we have a risk of 400 to 500. With the small amount of investment, we can enjoy large profit if the stocks moves upward. This type of strategy investor will apply when they don't want to invest large capital in their stock. In this video, we will see with an example how much margin will be required for this strategy. Large profit is expected when stock moves upward, and also we have a potential losses when stock does not move. Under Angel One Insta Trade platform, we will see this strategy with an example. Let's take Wipro as an example stock. Under Insta Trade, if you search Wipro, you can find the option chain. Wipro is trading around 420 range. Choose the next month expiry time. You can find the combination of call and put premium. The strike price of 380 is trading around 3.90 and 460 call is trading around 6.50. Let's select put option first to sell. By clicking the sell button, you can find the order screen. Just enter the lot size. The margin will be reflected below. After confirming all the details, just press sell button. Both orders should be executed at very small interval of time. Let's now choose the call option to buy. The 460 strike is trading around 6.50. The order screen has opened. The lot is 1. The total margin required is 6,500. Once the details are cross-checked, just press the buy button. The total lot size for this stock is 1000 quantity. Lot size may vary depending on the various stocks. Let's calculate the total margin required for this option strategy. The put option premium comes around 3.5 and call option premium comes around 6.5 into 1000 around, which is 6,500. When we total up 6,400 to 500 range plus the put option premium 54,000 margin it was requested. So total of 60,000 is required to apply this strategy. Suppose if we buying this share in cash segment for 1000 quantity, it will comes around 4 lakhs. However, by applying this strategy, we should have only 60,000. It will reward us only when market moves upward. Check the below link to open free Demat account to invest.